Hi, our topic for today is receivable financing. So what do we mean by receivable financing? So when we say receivable financing, it is the short-term financing of the business, short-term financing of the business in which the business uses its receivables to raise funds. Okay, so short-term financing of the business in which the business uses its receivables to raise funds. So how does the business use the receivable? So it's either as a collateral or through seal. So by using the receivable as a collateral or through seal, we raise fund. Okay, so that's why it's known as receivable financing. So what should we expect in this particular topic? So in this topic, receivable financing, we will learn the following. We will learn the different modes of receivable financing, which is the pledge, assignment, factoring, and of course, discounting. And then after we learn the different modes of receivable financing, we should also learn the accounting for the receivable financing. Okay, so we will learn the specific accounting for a particular receivable financing. So we start now with pledge. So as we say a while back, we said that there are four modes of receivable financing: pledge, assignment, factoring, and discounting. Okay, pledge, assignment, and factoring pertains to accounts receivable. So if ever we need to finance the business through accounts receivable, our receivable financing is known as either pledge, assignment, or factoring. But if ever our short-term financing is through discounting, so the receivable use here is known as your notes receivable. Okay, so AR, if ever we use AR as a receivable financing, what are the modes? Pledge, assignment, factoring. If ever it's notes, discounting. So we start with pledge. So pledge is the first receivable financing mode of receivable financing for AR. So what is pledge? Pledge is also known as hypothecation. Hypothecation. So what is this pledge? So in this pledge, receivables, particularly AR, is used as a collateral to a loan. As a collateral to a loan. So since this is only a collateral, there is no transfer of risk and rewards of ownership. So it is only a collateral, meaning it is a security. It is a security. Since it is a security, it means that there will be no transfer of risk and rewards of ownership. So just like if ever you loan something and you use your properties as a mortgage over that loan, you do not recognize the property because you use the property as a security, because the risk and rewards of ownership will still remain to you. So here, even if you use the AR as a collateral or as a security to raise funds for the business, we don't make any entry as to the recognition of the AR because it is mere security. It is mere security. So since it is mere security, take note guys, there is no transfer of risk and rewards of ownership, therefore no the recognition of AR. No the recognition of AR. So there is no entry made on this type of mode of financing. So under your pledge, there's no recognition of AR and there's no entry made on the pledge. Okay, there is no entry made on the pledge. So what is only the entry under your pledge? This is the recognition of the loan. recognition of the loan. Okay, so that is pledge. Another mode of receivable financing is your assignment. Okay, so what is assignment? An assignment is a more formal type of pledge. So why is it more formal type of pledge? Because take note, in pledge, there is no entry made. There is no entry made. And it is only treated as a security. While here in your assignment, although it is treated also as a security, or a form of secured borrowing, it is considered formal because the AR is assigned to another person. Okay, so what is this assignment? This assignment is a concept in your obligations and contracts in which the rights over the AR is transferred to another person. So it is assigned to another person. That's why it is known as more formal. So it is not only just a security or as a secured borrowing, but it is assigned to another person. So there is a transfer to another person. But take note, this transfer is not considered as a sale. It is only an assignment. It is only as an assignment. So we assign it to a particular person. So it's not a sale, but we assign it. So what happens in an assignment is that, for example, a company, this is the company. So this is our company. You have your receivables. So when we say assign, this particular receivables is assigned to an assignor. It is assigned to an assignor. Okay. The assignor now assigns it, of course, to a bank, which is known as your assignee. Okay. So this receivable assigned is to be assigned by the assignor. Who's this assignor? The company. And who will be the person assigned? It is the assignee. Okay. So now we have a receivable which is now assigned to a bank. It means that the bank has the risks and rewards over the assigned accounts. But this risks and rewards does not account as a sale. Because here in sale, you recognize or transfer wholly the ownership. Okay, you transfer wholly the ownership. And what is the difference regarding assignment? What is the difference regarding assignment? So in assignment, there is a transfer of property over a right to a particular property, of course, under an agreement. And normally, this transfer of rights, again, as I told you a while back, is not the transfer of ownership. It's not the transfer of ownership. So you only assign. Okay? So again, when we assign, we only assign the rights, which is the risks and rewards over the collection of AR, but not the ownership over the AR. Okay? So assignment, risks and rewards over the collection of AR, but not the ownership over the AR. Again, who are the parties? You have your assigner and the assignee. So the assigner is the one who assigns the receivable, while the assignee is the person assigned. So here, let's say we have receivables, we assign it to the bank, which is the assignee over the receivables. Okay, so there are two types of assignment. So first is notification and non-notification. So what is the difference of the notification type and the non-notification? In your notification type, the AR is notified over the assignment agreement. Okay, take note, what is the effect of the assignment agreement? The assignee has rights to collect the AR. Okay, so the AR is now notified over the assignment agreement. And what is the effect of the assignment agreement? Assignee has rights to collect the AR. Since the assignee has the rights to collect the AR and the owner of the AR, which is the debtor who has the accounts payable, is notified about the assignment. So what happens here is we have here your assignor. This is the company. We have the assignee, which is the bank, and we have your AR. So the assignor notifies the AR, And since the assignee has the right to collect, instead of assignee going to the assignor, the assignee directly collects the AR. Assignee directly collects AR, and the AR directly pays to the assignee. Okay? So here again, since the assignor notifies the AR regarding the assignment, and since the assignee has rights to collect the AR, now here, assignee, instead of directly going to the assignor, so instead of going here, what happens is the assignee goes directly to the AR to collect the AR, and of course, the AR will pay to the assignee. How about non-notification? In a non-notification, the AR is not notified over the assignment. Since the AR is not notified, it means they do not know that the collection should be done by the assignee. Okay? So here, wala na siyang alam na si assignee dapat ang mangongolekta. Kasi nga, it is non-notification. Take note, what is the right of the assignee here? To collect the AR. But since it is non-notification, the bank does not have the right to enforce it because the other party of the contract is not notified regarding the assignment. So what happens here again is we have your assignor, we have your AR, and we have your assignee. Okay, so there is no notification. So the assignor now then will not notify the AR. So what happens here? Since AR is not informed, then the AR will directly pay the assigner. And the assigner in return pays the assignee, and the assignee collects from the assigner. Okay? So AR is not informed. Since they are not informed, sa isip nila, I will need to still pay the company. I still need to pay the company. So that is the assigner. So upon payment to the assigner, normally the assigner will remit the same to the assignee, or the assignee will collect from the assigner. So take note regarding your notification and non-notification. Look as to the relationship of the AR as to the assignee. So in your AR and assignee in your notification, there is a direct relationship. While in your non-notification, there's no direct relationship because the AR is not notified. Therefore, AR will still pay to the assigner before the assignee can collect to before the assignee can collect the amount of the AR. So the assigner now will pay the assignee, and the assignee will collect from the assigner. Okay. So we mentioned also a while back that your assignment is a secured borrowing. That assignment is secured borrowing. So why do we say that your assignment is a secured borrowing? Assignment is a secured borrowing because here your AR is again used as a collateral over the financing. But take note, it is formal because of the assignment. Because of the assignment. And again, the assignment will give the assignee the rights to collect over the AR. The right to collect over the AR. Take note, guys, that since assignment is a secured borrowing, always that this collateral should be greater to the amount of borrowing. Okay? The collateral should be greater to the amount of the borrowing because rarely do banks does not require a lesser, or the bank require a lesser amount of collateral. It will always be greater than the amount of the borrowing. Now, how do we account for your assignment? How do we account for your assignment? So in accounting for your assignment, we need to transfer receivables to receivable assigned. Okay, we need to transfer receivables to receivable assigned. And take note, since there is either non-notification or notification, there is a change as to the recording of your assignment. So what are the journal entries then to record the assignment? So that can either be, again, notification or non-notification. Okay, notification or non-notification. So the first journal entry is, of course, to transfer receivables assigned. So whether notification or non-notification, we have the same entry. We debit AR assigned, we credit AR. So there will only be a transfer from AR to AR assigned. Next journal entry is, of course, to record the borrowing. Okay, to record the borrowing, what we do is we debit cash, and then we credit either loans or notes. Loans or notes, and we also debit any service charges. Okay, so cash, service charge, loans, or notes payable. Okay, to record the recording. Now, since this is an AR, take note, how do we compute for the balance of the AR? we get for any allowance for returns, we get for any allowance for discounts, and we get for any allowance for doubtful accounts and allowance for free charge. So what if under your notification and non-notification of the AR, there is a sales return? So accounting for sales return. To account for the sales return, we just debit sales return, still the same. Debit sales return, credit AR assigned. So take note, what we will reduce here now is the AR assigned because the AR now is transferred to the AR assigned account. Okay, so sales return and then AR assigned. The same. Next, you have your collection within the discount. So collection within the discount. This only happens in notification. Why? Because guys, this only happens in non-notification because guys, in notification, take note, we don't know if ever there is a payment or not because the AR will directly pay to the assignee. So we only know about the collection within the discount period in a non-notification. So what is our entry? We debit cash, we we debit sales discount, and we credit AR assigned. Okay. And what is this collection within the discount in your notification? The collection within the discount in your notification is when the assignee informs the corporation or the company regarding the collection. So there will be now a collection within the discount by the assignee. Okay. So take note of the difference. In your non-notification, this happens because, again, we can directly collect because there's no notification regarding the transfer of AR to the assignee. However, in your notification, there is a notification. Hence, what happens here in your collection is that it will be collected by the assignee. Therefore, you will only be informed by the assignee once the collection is made. So what triggers your notification recording of collection? It is triggered by the information given by the assignee that a certain amount was already collected. So how do we record the collection of your AR in your notification? So first, it must cover any interest expense. It must cover any interest expense. And then next, it must you must deduct the balance on the notes payable or loans payable. And if ever there is a sales discount, you debit sales discount and you credit AR assigned. Okay. So this one again, wholly we collect. While here, take note, if ever there is a collection by the assignee, first you apply to interest, if any, and then next apply to principal the remainder. Okay, so take note of this. So here in your collection within the discount by the assignee, this is considered as a collection with remittance. It is considered as a collection with remittance. Therefore, take note, there is no remittance. There is no remittance in notification. There is no remittance in notification because again, no need to pay. The assigner does not need to pay to the assignee because directly the AR pays to the assignee. So when do we have a remittance? Remittance only happens in non-notification. Applies to non-notification. So what is our entry to record the remittance? So here, whatever is collected is remitted to the assignee. Whatever is collected is remitted to the assignee. So what is our entry? We debit interest expense. We debit notes payable or loans payable. We credit cash. Okay, so here, we just debit interest expense, notes payable, loans payable, and cash. So take note, the collection again here, collection here applies first to the interest and then subsequently to the principal amount. Subsequently to the principal amount. So let's summarize here. For the transfer of receivable assigned, the same. To record the borrowing, the same. Accounting for sales return, the same. What is different? The recording of collection and remittance. So the difference of the journal entries between notification and non-notification is the remittance and collection. Why? Because in your notification, the collection is considered as remittance. While in your non-notification, collection is recorded first, remittance follows. So as you can see, we look as to the entries. Here in your notification, what is our entry? Since it is notified, then what happens is we just remove the AR assigned. We apply first to any interest, and then the notes or the loans, and if there is a sales discount. So only one entry. In your non-notification, we record first the collection. So we debit cash, we debit sales discount if any, and we credit AR assigned. And then, so this is your collection, and then we will have a remittance. And under your remittance, what is our entry? We credit cash, we pay first any interest, and then we pay the notes payable or the loans payable. So as you can see, guys, they are almost the same. But then, except in your notification, we only have a collection, which is considered the remittance because here, the AR directly pays to the assignee. In non-notif, what happens is, umiikot pa kasi. Di ba yung notif kasi, AR, diretso kay assignee. Dito sa non-notif, AR, pupunta muna kay assignor, tapos kay assignee. Ayan. Ito yung sinasabi natin na yung collection is already considered the remittance. Dito talaga, this is the process of collection. Ito naman is the process of remittance. Ayan. So I hope you can now draw the difference between notification and non-notification. That is based on the collection. Because in your notification, direct. In your non-notification, indirect. So we have first a collection by the assigner and then paying to the assignee whatever the amount of collection. And the last entry as to your assignment, that is the transfer of AR assigned balance. AR assigned balance. So what is this AR assigned balance? This AR assigned balance is the amount of AR assigned remaining after satisfaction of the loan or notes payable. So let's say you keep on collecting and collecting and collecting, and the amount is already enough to satisfy your loan and notes payable, and there is a balance on your AR assigned, then we need to transfer the balance now. So we transfer the AR assigned balance to unassigned again. So whether notification or non-notification, we have the same entry. We debit AR, we credit AR assigned. Sir, what if during the period there is a write-off of accounts? So if there is a write-off of accounts, guys, the same pa rin naman yung entry natin. If there is a write-off of accounts, the same pa rin yung entry natin. So we debit AFDA, we credit AR assigned in case. So again, saan lang nagkaiba yung notification and non-notification? That is your collection and your remittance. Collection and your remittance. So let's have an example. So the amount of AR assigned is, let's say, 2 million pesos. The amount of your notes payable is 1,500,000 pesos. 1,500,000 pesos, bearing a 10% interest. Bearing a 10% interest. Now, service charges is worth 5% of the principal amount. 5% of the principal amount. So, we try to record if ever there is a collection of AR. So let's say you borrowed on January 1, and then you have a collection on January 25, which is 500,000 pesos, gross of 2% cash discount. 2% cash discount. And then we also have a collection on February 30. February 30, let's say 600,000. Okay. I think that's enough already for an example. So let's try to answer it with your notification and non-notification. So our first entry, of course, is the transfer of receivables. So we debit AR assigned, credit AR unassigned. The amount is 2 million pesos. So this is the same, whether notif or non-notif. Next, we record the amount of the loan. So we debit cash, we credit notes payable, and we debit service charge. So the service charge is equal to 5% of 1.5 million. 5% of 1.5 million. So 1.5 million times 5% is 75,000. So our net cash proceeds 1.5 million less 75,000 is 1,425,000. Okay. So either notif or non-notif, we have the same entry. We have the same entry. Okay. Next, we record the collection. We record the collection. and remittance. So take note, guys, if ever we collect directly, we have a remittance. So first, you have your 500,000 collection, 500,000 gross of 2% cash discount. So you need to deduct first cash discount. So that is 2% of 500,000. So this is 10,000. So 490,000. And this 490,000 first to interest expense and then to principal. Okay. So for interest expense, we compute, guys, in computing for your interest expense, please use 365. We use the actual days unless the problem will tell you that you will use the 360, the 360. So we use here 365. So to compute, we have here 1.5 million multiplied by the interest of 10%, multiplied by the number of days, January 1 to 25. So we have 25 days divided by 365. So let's compute 1.5 times 10% times 25 over 365. So we have here 10,273.97. So the amount attributable to the principal is equal to 479,726.03. 479,726.03. Okay, so why is it important for us to divide the portions this way? So guys, if ever you have a collection and a remittance under your assignment, always do this technique. So just get first the value or the net cash received, that is 490,000, and take note, you need to get first the interest expense before satisfying the principal. So here we compute the interest expense based on the principal times 3 times time period. Okay, so 25 over 365. So we record this one. So to record this, our entry under your notification, we just remove the AR assigned. We remove the AR assigned amounting to the AR collected, 500,000 pesos. We record the sales discount, which is the cash discount, 10,000 pesos. And then we record the interest expense, and the amount of the principal repayment. So we have here 10,273.97 and 479,726.03. That's under notification. How about non-notification? Take note, we have a two-step process here. First, we record the collection. So to record the collection, we debit cash, sales discount, and then AR assigned. So the amount of cash received is 490,000, and the sales discount is 10,000, and the AR assigned is 500,000. And then we will record the remittance by debiting interest expense, and then notes payable, and a credit to cash amounting to 10,273.97, 479,726.03. This will still give us 490,000. Okay, notif and then non-notif. Okay, one thing, we still need to know the equity on assigned accounts. Okay, so I'll just discuss this before we go further. So what is this equity on assigned accounts? This is the balance on the AR, after satisfying the principal loan. Okay, so balance on AR after satisfying the principal loan. So what we do here, we have your AR, we get the current balance versus the principal balance. Okay, in your AR balance, of course, this is equal to your AR NRV. AR NRV, that is less the sales discount, less the sales return, less the allowances. In your principal balance, this is equal to your beginning balance less any principal repayment. Okay, so we use this AR balance. So if ever we use our AR balance, initially we have AR of 2 million, right? And then binawasan natin siya ng 500, tama? So our AR balance here is 2 million less 500,000 because of the collection, 1.5 million. And then we compute for the principal balance. So our beginning balance on the principal is 1.5 million. Ang inutang natin ay 1.5. Meron tayong principal repayment kanina na 479,726.03. So 1.5 less that value will give us 1,020,273.97. So take note, in your equity on assigned accounts, you get the balance on AR after satisfying the principal loan. So we just get first the AR balance and then the principal balance. So whatever is the balance, that is your equity on assigned accounts. Equity on assigned accounts. So what is our equity on assigned accounts? This is the balance on AR after satisfying the principal loan. So it is equal to AR balance less the principal balance. So 1.5 million, which is the AR balance, less the principal balance of 1,020,273.97. Our answer is 479,726.03. So what is the effect of your equity on assigned accounts? The equity on assigned accounts will be disclosed on the notes. Disclosed on the notes. So whether it is positive or negative, you disclose on the notes. More so if it's negative because it shows that you don't have any rights remaining over the AR. It shows that you don't have any rights remaining over the AR. Okay, so that is for our first collection, which is worth 500,000. We go back to our example. February 30. There's no February 30. February 15 para medyo konti na lang yung days niya. February 15, 600,000 pesos. So we have a collection of 600,000 pesos on February 15. So we will make our entry on February 15. So that is 600,000 pesos. Is there any cash discount? No. So this is already the net cash. You get for the interest expense, and then you get for the amount of the principal repayment. So our interest expense is equal to the balance of our principal, which is 1,020,273.97 times 10% times the period that is from January 26 to February 15. Sir, why January 26? Kasi guys, di ba, kailan ba yung huling bayad natin? January 25. So magra-run yung interest 26 to February 15. 26, 27, 28, 29, 30, 31, and then 15. So we have 21 days. So 21 over 365. So our interest expense is equal to, so we'll just compute it, 1020 to 73.97 times 10% times 21 over 365 will give us 5,870.07. So 600,000 less 5,870.07 will give us principal repayment of 594,129.93. Okay, again, ang technique natin, hatiin natin yung ating collection as to the interest expense and the principal repayment. Okay, guys. Now, since we're ready as to the amounts, we can now make our entry. So first, you have your notification basis. So under notification basis, how do we make our entry again? We just remove the AR assigned as to the amount of AR collected, 600,000. If there is any sales return, sales discount, you record it. So in this case, there's no sales return and there's no sales discount. And then we record now the portion attributable to interest expense, and the amount of the principal. So this is 5870.07, and this is 594,129.93. How about in your non-notif? So it is a two-way process. We first record the collection. So we debit cash, we credit AR assigned. Okay, and then we record the amount of collection, which is equal to 600,000 pesos. And then we record the payment of your remittance. So the record that we debit interest expense, and then we have your principal repayment, which is a debit to notes payable, and then credit to cash. So this is 5870.07, 594,129.93, 600,000 pesos. Okay. So again, after a payment, we can compute for the equity on assigned accounts. So we get the balance. So what is our AR balance a while back? So we have 2 million, less collections of 500, less collection of 600, we have 900,000. Next, we compute for the principal. So for our notes payable, our first principal is 1.5 million. There is a payment amounting to 479,726.03. And then another payment now, which is 594,129.93. Then we get the balance of the notes payable, less 479,726.03, less 594,129.93. So we have here 426,144.04. We get the difference, 900,000, that's 426,144.04. We have 473,855.96. You present this as equity over assigned accounts and presented in our notes. Okay, so that's it for our assignment. Take note as to the difference only, that is the recording of our collection and remittance. In your notification, one-time entry. In non-notification, there is a two-way entry, that is first on the collection, and then we record the remittance. Okay, so we're done with the two modes of receivable financing as to your AR, that is your pledge and your assignment. We proceed now to factoring. We proceed now to factoring. So factoring now is the third mode of receivable financing, and is the last mode as to your AR. Okay, so remember in your AR, sabi natin tatlo, di ba? Have your pledge, we have your assignment, and lastly, we have your factoring. Okay, so factoring is the third mode as to the different receivable financing, and also the last mode as to your receivable financing as to your AR. So what is a factoring? What is a factoring? So factoring is the sale of receivable, sale of receivable. Take note, pledge and assignment is the collateral or a secured borrowing, while your factoring is the seal. Take note, there are only two modes to use your receivable as a financing, either as a collateral or a secured borrowing, or as a sale. And factoring here now is the sale of receivable. So to whom do we sell the receivable? The receivable is sold to a factor. Sold to a factor, which is normally a bank or a financial intermediary. Okay, so in factoring, what we need to understand here is the amount of our cash proceeds at the date of factoring, okay, and also the loss on factoring, again, at the date of factoring. We start first with the computation of your cash proceeds at the date of factoring. So normally, in your cash proceeds, we have your amount of AR less fees and charges, less, we also have your factors holdback. Okay, so this is the amount of your cash proceeds. Sure, what are these fees and charges? These fees and charges normally is composed of your first your factoring fee, so the fee charged by the factor on the factoring of your accounts receivable. Also, we have your finance charges. So normally, these are the items only that is charged over the amount of your AR. Next, we have your factors holdback. What is this factors holdback? This factors holdback is the amount of AR retained. This is the amount that is retained as to the probable sales return, discount, and allowance. So it is the amount retained by the factor for the probable returns, allowance, and discount. So fees and charges, of course, is presented as an expense, while your factors holdback is presented as an item of your current asset. Current asset. So it is known as receivable from factor. Okay, so guys, factoring fee, finance charges are normally expense, and your factors holdback, this is an item of your current asset. But later, you will learn that although this is an expense, it will be embedded. It will be embedded on the gain or loss on factoring. Okay, so later you will learn that this will be embedded in the gain or loss on factoring. So that is on your cash proceeds. So again, when we see cash proceeds, that is the amount that you receive out of the factoring at the date of factoring. So that is equal to your amount of AR. And then we have your fees and charges, the factors holdback to get for the cash proceeds. Okay, now we go to your computation of your gain or loss on factoring. Computation of your gain or loss on factoring. So in your computation of your gain or loss on factoring, we get for the net selling price versus the amount of AR. So sir, is the net selling price equal to your cash proceeds? So question here is, your cash proceeds, is it equal to your net selling price? No. It is not equal at all times. It is not equal at all times. It is only equal if it is without recourse. It is only equal if it is without recourse. Okay, so in your net selling price, how to compute for this one? Net selling price is equal to your amount of AR less, of course, your fees and charges less your recourse obligation. This is the net selling price. This, at some point, is known as your net proceeds on the sale. Net proceeds on the sale. So we just get for the amount of AR, you deduct the fees and charges and the recourse obligation, we have your net proceeds. And then we compare it to your book value of AR. So we compare it to the amount of AR again. So net selling price versus amount of AR, we have your gain or loss on factoring. But guys, rarely do we have gain on factoring. It is always equal to a loss. So it is always a loss. So how do we compute for your loss again? We compare the net proceeds to the amount of AR. But actually, the amount of your loss on factoring is equal to your fees and charges and your recourse obligation. So ito lang yung loss on factoring natin. So kung papansin niyo yung formula na present natin, you have your net selling price and the amount of AR. So we get the amount of AR, the fees and charges, and the recourse obligation. So amount of AR, remove that one, right? So kumbaga mag-i-equalize yan. So saan sila nag-iba? Dito kasi nabawasan siya ng fees and charges and recourse obligation. Dito wala. In short, ano lang yung loss on factoring? Eh di yung fees and charges and recourse obligation. That's why I don't really teach the formulas which is provided in the textbooks, because actually what is the amount of your loss in factoring is the fees and charges and the recourse obligation only. Once you know that these items are the only items of your loss, then you do not need to know the other formula as the gain or loss in factoring. You just need to know what is the cash proceeds, and the items of your loss on factoring is only fees and charges and recourse obligation. You're good to go. No need to memorize all the formula. And so long as you understand the concept of your factoring as a sale of AR, then it will be easier for you to remember the amount of your cash proceeds and the amount of your loss on factoring. Okay, take note again, ha. In your loss on factoring, we have this formula: amount of AR less fees and charges less recourse obligation, and then compared to amount of AR. So amount of AR will cancel out each other. Therefore, the difference lies on the fees and charges and the recourse obligation. Since they are both negative, therefore they are considered as a loss on factoring. Take note guys, sabi ko nga kanina, factoring fee and finance charges are embedded on your gain or loss on factoring. And take note, misnomer yung gain or loss on factoring. Laging loss on factoring. Never kang makakakita ng gain on factoring. Never kang makakakita ng gain on factoring. Okay, so after knowing how to compute for your cash proceeds and the amount of our loss on factoring, we determine what is a recourse obligation. A recourse obligation arises during factoring with recourse. It arises during factoring with recourse. This recourse obligation is a current liability, and normally the amount of your recourse obligation is the fair value of the recourse. The fair value of the recourse. Sir, how do we compute for the fair value of the recourse? The fair value of the recourse will always be presented or given in the problem. It will always be given in the problem. Okay, so take note, fees and charges and recourse obligation is part of your loss on factoring, and a recourse obligation arises during the factoring with recourse, and it is treated as a current liability, and the value is the fair value of the recourse obligation, which is given now in the problem. This now gives us the two modes or types of factoring. So if your assignment can be notification or non-notification, your factoring can either be without recourse or with recourse. So first, we need to know what is a recourse. A recourse is an action by the factor to recover over the seller of the AR. So the factor has a recourse to recover to the company the AR. Okay, so in case there is any returns, allowances, and discounts, or any doubtful accounts, and it is not enough to cover the factor, we have here your recourse obligation. So it can be without recourse, it can be with recourse. If it's without recourse, therefore no right to recover, no right to recover. If with recourse, the factor has the right to recover. So the next question here is there a difference as to the journal entries regarding without recourse and with recourse. So the only difference here is the recording as to the factoring. So to record factoring, so we debit cash, we debit also AFDA, and then we remove the AR. Take note, we need to remove the net AR, so that is AR less AFDA. And then we also have your receivable from factor. Take note, this is a current asset. And then we have your loss on factoring. Okay, guys, ito, importante din to. The loss on factoring in with recourse, the loss on factoring in with recourse is only, in without recourse is only the finance charges. So this is only your fees and charges. Ayan, tandaan nyo yan na. Pagka without recourse yan, yung amount ng ating loss on factoring is the fees and charges. Ito yung receivable from factor is the factor's holdback. Okay, and AFDA less AR is the net AR. So AR less AFDA is the net AR. And the cash is the cash proceeds. If it's with recourse, we debit cash, we debit AFDA, we debit receivable from factor, and then we debit loss on factoring, and then we credit AR, and then we credit recourse obligation. Okay, so cash is still cash proceeds, AR AFDA, that is the net AR. Receivable from factor is the factor's holdback. The loss on factoring in with recourse is composed now of your fees and charges plus your recourse obligation. Plus your recourse obligation. And what is this recourse obligation? That is the fair value of the estimated recourse. Fair value of the estimated recourse. Okay. So after knowing how to compute for your cash proceeds and the entry, if it is with recourse or without recourse, let's have an example. So let's say, for example, we start with without recourse. So let's say our AR is equal to 300,000. Our AFDA is equal to 2,000. So we have a factoring fee, which is equal to 2% of AR. And then we have a finance charges, which is equal to 15% computed on 55 days. Computed on 55 days. So let's say ganyan siya without recourse. So AR 300,000 after 2,000. And then we have your factoring fee, 2% of AR. We have your finance charges of 15% computed on 55 days. Okay. So first, we need to compute for the amount of our cash proceeds. Cash proceeds. So what is the cash proceeds? So in this case, we assume that the cash proceeds is equal to the AR less AFDA. AR less AFDA, and then we deduct the finance fees and the finance charges. Okay, so we have your book value of AR, 300,000 less 2,000, 298,000 less finance fee, 2% of AR. Let's assume that this is 2% of the gross AR. So 2% of 300,000 is equal to, right, we'll just compute 300,000 times 2% is 6,000, less finance charges, which is equal to 15% computed on 55 days. So let's assume that this is based on your gross. This is based on your gross. So we have your 300,000 times 15% times 55 over 365. So guys, gamitin natin yung 365 pagka silent yung problem kasi syempre assume natin na whole calendar year yan. Unless sinabi ng problem na 360. Okay? So 300,000 times 15% times 55 over 365, we have 6780.82. So our cash proceeds is equal to, so we have 298 less 6,000 less 6780.82. Guys, regarding finance fees and finance charges, tignan niyo yung problem kung it is based on the net AR or based on the gross AR. Dito kasi binase natin siya sa gross AR. So what if silent yung problem? Pagka silent yung problem, binibase siya doon sa amount or net amount of the AR normally. Okay, so 298,000 less 6780.82 less 6,000. So 298 less 6,000 less 6780.82. We have here 285, 219.18. Okay, so this is the cash proceeds. What is the loss on factoring? The loss on factoring is only composed of your fees and charges. So finance fee, and of course your factoring fees. So 6,000 plus 6,780. So we have 12,780.82. So let's make our entry. We remove the AR. So AR 300,000, and we remove the corresponding AFDA 2,000. Also, we record the cash proceeds 285,219.18. Do you have any factors hold back? None. But we have your loss on factoring amounting to 12,780.82. So as you can see here, loss on factoring will only be based on your finance and charges. So what if there is a factors holdback? So assuming, sasabihin ba dito, there is a factors holdback of 3%. So same siya, same lang, pero magkakaroon ng factors holdback na 3%. So assuming factors holdback is equal to 3% of net AR. Okay, so we still get the book value, which is 298,000. We already compute your fees and charges, which is equal to 12,780.82 less factors holdback. So that is 3% of net AR. So 3% times 298,000. So this will give us 8,940. So 8,940. So our cash proceeds now then is equal to 276,279.18. No change on your loss on factoring. So what is our entry? Debit cash, but cash proceeds ang ginagamit ko dito. Debit cash amounting to 276,279.18. And then we record your AFTA 2,000, your loss on factoring, which is equal to 8,000. No, it's not 8,940. That is the factors holdback. It's 12,780.82. And then we have your factors holdback or your receivable from factor. This is equal to 8,940. And then we remove the AR amounting to 300,000. We remove the AR amounting to 300,000 pesos. So anong nagbago dito? May factors holdback dito. Walang factors holdback. Pero nagbago ba yung loss and factoring? Wala. Kasi yung loss and factoring ninyo in without recourse is equal only to your finance charges and your factoring fee or fees and charges. Clear? I hope it's clear. We go now to another example for your with recourse. Another example for your with recourse. So, mag-iba naman tayo ng amount. So, let's say the AR is 2 million. Let's say the AR is 2 million. And then you are charged with a finance fee, which is equal to 60 over 360, 12%. And then we also have your factoring fee, which is equal to 3% of AR. And then we have your factors holdback, which is equal to 5% of AR. And the value of the recourse obligation is, let's say the fair value is 10,000 pesos. Okay, so we compute for your cash proceeds. Your cash proceeds is equal to the balance of AR, 2 million, less any finance fee, which is equal to 12% times 60 over 360 times 2 million. So this is 40,000 less factor fee, 3% of 2 million. So 2 million times 3% is 60,000 less factors holdback, which is equal to your 5% of 2 million. So 2 million times 5% is 100,000. So we have here our cash proceeds. So 2 million less 40,000 less 60,000 less 100,000, 1.8 million pesos. 1.8 million pesos. And what is the loss on factoring? Anong sikreto natin sa loss and factoring sa with recourse? Napakadali. Ang kukunin nyo lang dyan is the finance and the fees and charges at saka yung recourse obligation. So ang ating finance fees at saka factor fees is 40 and 60. So 40K plus 60K. So this will give us 100K. And then we have your recourse obligation of 10,000. We have 110,000. Okay. So ayan. Compute na natin. Let's see if tama. So, ang gagawin natin, i-record natin yung cash proceeds at 1.8 million. Tatanggalin natin yung AR, which is equal to 2 million pesos. I-record natin yung ating receivable from factor, which is the factor's holdback, the receivable, amounting to 100,000. We will record the recourse obligation amounting to 10,000. Okay? So, factor holdback, which is the receivable from factor, 100,000, and then we record the loss on factoring. So how much is our loss on factoring? We have computed that a while back at 110,000. So how much is this one? 1.8 plus 100 plus 1.10. So 2,010,000. So this one is still 2,010,000. So, di ba? Napakadali. So cash proceeds, walang magbabago sa pag-compute natin. Isa lang ang formula natin. Cash proceeds is equal to your AR net less any fees and charges, less any factors holdback. While loss on factoring, dalawa lang naman yan. It is either without recourse or with recourse. If without recourse, it is only your finance charges and your factoring fee. So we have your fees and charges. If it is with recourse, it is equal to your fees and charges plus the recourse obligation. Okay? So, napakadali ng ating factoring. We proceed now to the last mode of receivable financing. This is discounting. This is the last mode of receivable financing and pertains only to notes receivable. This is the only mode that pertains to your notes receivable discounting. So discounting of notes receivable. Discounting of notes receivable. So in your discounting of notes receivable, you will meet this different terms. So it can be a discounting without recourse or a discounting with recourse. And under your discounting with recourse, this can either be treated as a conditional sale and a secured borrowing. So in short, in a discounting of notes receivable again is used as either sale or a borrowing. Why? In your discounting without recourse and a discounting with recourse as a conditional sale, this is treated as a sale of notes receivable. While here in your secured borrowing, it is not treated as a sale. It is only used as a security. And since it is used as a security, what is the effect again? If ever it is used as a security, the receivable is not derecognized because there is no transfer of ownership in a security. So you will only recognize here a liability. So again here, receivable is not derecognized, but recognize the liability. Okay, how about in a sale? In a sale. So of course here, notes receivable is derecognized because it is sale. Here, in your conditional sale, notes receivable is not derecognized, but a contra notes receivable account is recognized. This is known as your notes receivable discounted. Okay. Ayan. So in your discounting, again, your notes receivable can either be used as a financing instrument for sale or borrowing. So it can be with recourse or without recourse. In your without recourse, this is considered as an outright sale. So notes receivable is recognized. If it is with recourse, it can either be a conditional sale or a secured borrowing. If that is a conditional sale, notes receivable is not recognized, but a contra notes receivable account is recognized. If that is treated as a secured borrowing, take note, if that is a security, receivable is not recognized. But we need to recognize the liability. Okay, so after knowing the different differences on your types of discounting, we proceed now as to the general formula in your discounting. So in your discounting for your notes receivable, we follow these steps. So in discounting for your notes receivable, we follow the following steps. So first, we compute for the maturity value. First, we compute for the maturity value. Okay. After computing your maturity value, your next step is to compute for your discount. And then after computing your discount, cash proceeds, and then gain or loss on discounting. So this is quite procedural. So first, maturity value. Maturity value is equal to your principal plus interest over the life of the note. Guys, compute interest only if that is interest-bearing note. Sir, what if it is non-interest-bearing and you do not add any interest, okay? So you only add interest if it's interest-bearing. Discount is equal to your maturity value multiplied by your discount percentage multiplied by the remaining term of the note. So it is based on the remaining term of the note or the discount period, okay? So remaining term. Cash proceeds is equal to your maturity value less discount. Cash proceeds is equal to your maturity value less discount. And gain or loss on discounting is equal to your CA of notes. Sir, what is the carrying amount of notes? This is equal to your principal plus accrued interest. And then less cash proceeds. So this can either be a gain or loss. If the cash proceeds is greater than the carrying amount, we have a gain. If the cash proceeds is lesser than the carrying amount, we have a loss. Okay, so again, it is quite procedural. You just follow the 4 items from the computation of maturity value, the discount, the cash proceeds, and the gain or loss on discounting. So let's have an example using this procedure. So discounted a 6-month 3 million 10% note after holding it for 2 months at a discount rate of 14%. Okay, so we compute first the maturity value. Maturity value is equal to your principal plus interest over the life of the note. So our principal is 3 million plus the interest, which is 3 million times 10%, 6 month yan eh. So ibig sabihin yan yung life ng note. So times 6 over 12. So the maturity value is equal to 3 million times 10%. 3,150,000. Okay, next, we compute for the discount. The discount is equal to your maturity value multiplied by your discount rate multiplied by your discount period. So our maturity value is 3,150,000 pesos. Our maturity value is 3,150,000 pesos multiplied by our discount rate, that is 14%, multiplied by our discount period. So our discount period is the remaining term of the note. So what is the remaining term? So after holding it for 2 months. So kung 6 months yan, hinawakan mo lang siya ng 2 months, ilan na lang yung natira? 4 months. So 6 over 2, 6 less 2 over 12. So 4 months yan. So 4 over 12. So 3,150,000 times 14% times 4 over 12. So we have here 147,000 pesos. Next, we compute for your cash proceeds, that is equal to your maturity value less your discount. So our maturity value is 3,150,000 less 147,000. So we have here 3,000 pesos. And 3,003,000 pesos. 3,003,000 pesos. 3,150 less 147,000. And then we compare it to the carrying amount. So our CA is equal to the principal amount. So the principal is equal to 3 million plus accrued interest receivable. This is 3 million. So 2 months lang natin siya hinawakan, no, at 10%. So times 2 over 12 times 10%. So 3 million times 2 over 12 times 10% is 50,000. So this will give us 3,050,000 less the cash proceeds of 3,003,000. So we have 47,000 pesos. 47,000 pesos. So this is considered as a loss. This is considered as a loss. So let's see how we will record it if ever it is without recourse, with recourse, but treated as secured borrowing. And then with recourse, treated as a conditional sale. Okay? So with recourse, considered as a conditional sale. So if ever it is without recourse, so we debit cash at the amount of our cash proceeds, which is equal to 3,003,000, 3,003,000, and then we debit the loss on discounting, which is 47,000 pesos. Tanggalin natin yung notes receivable, tapos i-record din natin yung interest income. So yung notes receivable natin ay 3 million, tapos yung interest income natin ay 50,000. Ayan. Next, what if it's a secured borrowing? Sabi natin, pagka secured borrowing, ang mangyayari, we do not recognize the NR, but we recognize a liability. So here, instead of NR, ang entry natin is cash, 3,003,000. So we have a loss of 47,000. And then we have your liability for notes receivable discounted. And then 3 million. Tapos, i-record natin yung interest income, which is 50,000. Ayan na. We only recognize a liability, but we do not recognize the NR. Here naman, if it is with conditional sale or conditional sale, we just debit cash for the cash proceeds, 3,003,000. And then we have here a loss amounting to 47,000. And we credit a notes receivable discounted. The notes receivable discounted is a contra note receivable account. So take note, this decreases NR. This decreases NR because it is contra. Liability does not decrease NR. This will decrease NR. Okay, so notes receivable discounted, 3 million, and then interest income, 50,000. Okay, so it's quite procedural. You just follow the procedure. So first, we just need to compute for the amount of our maturity value. Then we compute for the discount and cash proceeds. And then we compute for any gain or loss on your discounting. So what you need to learn here only is whether it is treated as without recourse, with recourse, as a secured borrowing, or a conditional sale. Take note, in without recourse, it decreases the NR wholly by recognizing the NR. If that is a secured borrowing, it does not decrease the NR, but we recognize a liability for notes receivable discounted. So what is this liability? Of course, it is presented as liability. Next, if that is with recourse conditional sale, the notes receivable discounted decreases the notes receivable because notes receivable discounted account is considered as a contra notes receivable account. It is considered as a contra notes receivable account. Okay? So here we learned the 4 types of receivable financing and what types of receivable financing is applicable to AR and NR. For AR, we said we have your pledge, assignment, and of course, factoring. And for your NR, we only have your discounting. But again, what are the uses of this particular receivable financing? Either through sale of the receivable or as a collateral or secured borrowing. Okay. So that's it for our receivable financing. Thank you.